Did you know your Chime account can do more than just to help you spend and save? With a strong Chime transaction history, you can boost your chances of getting approved for a loan. Hello everyone, welcome back to our channel. So in today's video, I'm going to read out this Chime article, which is how to get a personal loan in 5 easy steps. So stay with me and see this video till the end. In this video, Chime has offered Get Paid When You Save features, where you get up to $50 of your pay before your payday, which is no mandatory fee, no credit check, and no interest as well. So here is a key takeaway before applying for a personal loan. Determine how much you need to borrow and if you have a good credit score. Research multiple lenders and get pre-qualified before applying for your chosen personal loan. Lastly, review the loan terms carefully before applying or accepting the offer. Now, the first one is determine how much you need to borrow. Before you start the application process, decide how much you need. A personal loan amount typically range from $1,000 to $50,000, but that doesn't mean you should borrow as much as possible. You have to repay the full amount and any accrued interest, so don't commit to a loan you cannot afford. For you to get a loan you can afford, consider how much you need to cover the expense and whether you can use your savings to cover some of the expense, and lastly, your income and ability to repay the loan. So apply for the smallest loan possible to cover your expenses. A smaller loan means you can opt for a shorter loan term to maximize the amount of interest you pay, or a longer loan term to keep your repayment lower. So here you can calculate the interest on a loan. So they have an article for you to see how you can calculate the interest for a loan. So if you want, you have no idea about it, go ahead and read out for yourself. And now here the next is check your credit. Your credit score and history can show lenders how well you handle your existing debt. Lender can then use this information to access your credit risks and offer you appropriate loan terms. And knowing your credit score before applying for a loan can prevent surprises. So check your credit report through one of the major credit bureaus, which is Equifax, Experian, and TransUnion. And here they show a rating like which is good or exceptional or poor. So make sure you check the score. If you have like 740 to 799 in this range, which means your rating is pretty much good. So lenders are more likely to offer better terms and lower interest rate if you have a good to exceptional 670 plus credit score. But however, if your score is considered poor, which is under 580, then you may have a harder time finding the best personal loan terms and will have a lower likelihood of loan approval. So for that, if your credit score needs work, here's a few things that you can do to boost it before applying for a personal loan. First is getting a secure credit card. So you can go ahead and get a secure credit card for yourself. Then paying down your existing debt, and lastly, making on-time bill payment and removing collections from your credit report. Use their loan payoff calculator to help you to strategies and get out of debt faster. Then always research and compare lenders. So next, shop around with different lenders for the best rate and terms. When you compare loans and consider each lender's available loans amount, here is their annual percentages, rates or APR or interest rates and term lengths. And these personal loan rates and term lengths are accurate of 5, 13, 25. So these are the lenders and you have like an idea about each of the lender. So research before you go ahead. And for personal loan requirement, can vary between the lenders, and having the following can increase your chances of approval and reasonable APR. First, you need to have a good credit score. So if you have a FICO score of 670 or above, you have a decent shot at getting favorable personal loan terms, and your approval odds may drop if it's dropped below 7579, which is poor credit. Now, your proof of income. Lender look at your tax return, bank statement, or pay stub to determine your likelihood of being able to make monthly loan repayment. So, if your income is low or unpredictable, then you might have a difficult qualifying for a personal loan. And lastly, low debt to income or DIT ratio. Many lenders want your DIT ratio to be under 36%. Though the exact number can differ between lenders, so you can also calculate your DIT ratio and read this blog as well if you want to know your DIT ratio. So divide your monthly expenses by your gross monthly income. That's how you get your DIT ratio. And once you have compared loans, review each lender's eligibility criteria and see how factors like your credit history and income stack up. And here, if you're unsure of borrowing power or approval odds, get a pre-qualified or pre-approved to see your loan term option. And the next step is to apply to a lender. So when everything is ready, most lenders require this following. One is social security number, your contact information, proof of identity, proof of address, and lastly, income verification. So you can complete an application form online or in person at a bank branch. Some lenders may review and approve your loan on the same day, while others may take a longer to return a decision. Now, here is accept the loan offer or consider alternative. So once the lender has made a decision on your application, they will communicate the decision to you. If you're approved, the lender will send you the final loan documents detailing the loan amount, interest rate, loan terms, and repayment terms. So if the term they send work for you, you can accept the personal loan offer and wait for the lender to send you the funds. If a lender denies your personal loan application, here's a few things you can do to increase your approval odds when you reapply. First, pay off your credit card debt, find and borrow the income information from your credit report, look for a way to grow your income, and then ask someone you know to co-sign the loan, and lastly, apply for a smaller loan amount. Now, review this term carefully before accepting the offer and consider applying with a different lender if they don't meet your expectation. If everything looks good, then accept the offer. Now, in some cases, the lender may deny your application, and the Fair Credit Reporting Card requires lender to provide you with an explanation if your loan application is rejected. If this happens, here's how you can build or boost your credit to increase your approval odds when you reapply. Now, here are some other options beside a personal loan. Personal loan can be helpful when you need a cash quickly to pay an unexpected expense, and however, they are not the only options. So first is your home equity loan or line of credit. The other way is a credit card. Credit card help you for an emergency expense. So as you can see, Chime offer the get paid when you say features where you can get up to like $50 of your pay before the payday. It's like a loan they can give to you without just seeing your credits check, mandatory fees, or any interest as well. And lastly is like, yes, they're talking about paycheck advance, which is at Chime, my pay lets you pay get up to $50. So that's what I'm talking about, that Chime also have this good offer for you. If you have like if you want like a quick personal loan about like $50 or more, then go ahead and check out their Chime My Pay features. And I think Applying for a personal loan is very simple. You just have to follow this a step to apply for a loan. And I hope you got your answer in this video. That's it for this video. If this video helped you out, then like this video, comment down below, subscribe to this channel, and thanks for watching, and I will see you in my next video.